Hey there! In today's video, we're diving deep into the world of blockchain technology. Whether you've heard of it in the context of Bitcoin or other cryptocurrencies, or you're just starting to explore it, understanding how blockchain works is crucial. So let's break it down in simple terms. Section 1. What is blockchain? Blockchain is like a digital notebook where everyone can write down their transactions. But once something is written, it can't be erased or altered. It's decentralized, meaning there's no central authority like a bank or government controlling it. Instead, everyone on the network is responsible for verifying transactions. At the core, a blockchain is a chain of blocks that contains information, and each block holds a list of transactions. These blocks are connected to one another in a secure and transparent way. Section 2. How does blockchain work? Here's a simple way to understand how blockchain works. 1. The transaction. You want to send money to someone. Say you're transferring Bitcoin. When you initiate the transaction, it gets broadcasted to a network of computers called nodes. Second, verification. These nodes check if your transaction is valid. The nodes make sure you have enough Bitcoin and that your digital signature is correct. 3. Mining and consensus. After the transaction is validated, the network uses a process called mining to confirm it. Some blockchains use proof of work, POW, where miners solve complex mathematical problems to validate transactions and add them to the blockchain. Others use proof of stake, POS, where validators are chosen based on the amount of cryptocurrency they hold and are willing to stake as collateral. 4. Adding the block. Once the transaction is verified, it's added to a block. This block is then added to the chain of previous blocks, forming a blockchain. The beauty of blockchain is that once a block is added, it's almost impossible to change. Section 3. Why is blockchain so secure? So why do we trust blockchain with our money and personal data? Here's why it's so secure. 1. Immutability. Once a transaction is added to the blockchain, it's permanent. Each block is connected to the previous one through a cryptographic hash, which means that tampering with one block would require changing all the blocks that follow it. This is incredibly difficult and requires an immense amount of computing power. 2. Decentralization. Unlike traditional systems where data is stored in one place, like a bank's server, blockchain is decentralized. This means there's no single point of failure. Even if some nodes go offline or are hacked, the system remains intact. 3. Blockchain uses cryptographic techniques to secure transactions. Each user has a public key and a private key, and only the person with the private key can authorize transactions. Section 4. Applications of blockchain. So, blockchain isn't just about cryptocurrencies. Here are a few real-world applications of blockchain technology. 1. Cryptocurrency. The most well-known use of blockchain is in cryptocurrencies like Bitcoin and Ethereum. These digital currencies rely on blockchain for secure transactions without a central authority. 2. Supply chain management. Blockchain can track the journey of products from raw materials to finished goods. This increases transparency and helps prevent fraud. 3. Smart contracts. A smart contract is a self-executing contract where the terms are directly written into code. When both parties fulfill their requirements, the contract automatically executes, eliminating the need for intermediaries. 4. Healthcare. Blockchain can store medical records in a secure way. Patients control their data and can grant access to healthcare providers when needed, ensuring privacy and reducing the risk of fraud. 5. Voting systems. Blockchain could make elections more secure by ensuring that every vote is transparent, traceable, and tamper-proof. Section 5. What's the future of blockchain? Blockchain is still in its early stages, but its future looks incredibly promising. It could revolutionize industries from finance to healthcare to government systems. Some predictions for the future include decentralized finance, DeFi. Blockchain allows people to lend, borrow, and trade without needing banks or financial institutions. This can democratize access to financial services worldwide. Digital identity. Blockchain could create secure and verifiable digital identities, making it easier to prove who you are online without relying on a password or a third-party service. NFTs and digital ownership. Non-fungible tokens, NFTs, are another example of blockchain in action. They allow people to buy, sell, and trade unique digital items, like art or collectibles, with verifiable ownership. Section 6. Final thoughts. So, that's a quick breakdown of how blockchain works and why it's so important. It's all about transparency, security, and decentralization. Three things that can completely change how we interact with the digital world. I hope you found this video helpful. If you did, don't forget to like, subscribe, and hit the bell icon for more blockchain-related content.